Go up. I mean, a stock could go up because the company does well, because their earnings are going up, because they increase their dividends.
Remember, guys, this is my opinion, it's not an advice. Start with Jeremy Grantham. For people who don't know, he's a partner in QuantumScape, and he has all the benefits to hype up the stock, but listen to what he said.
This is a monetary game, and you can keep these little monetary bubbles going for just so long as you keep confidence rising. But when confidence has reached these levels, the history books are pretty clear. It's very difficult to increase your enthusiasm.
Next is Michael Berry, who was so famous for calling the 2008 market crash, and he made hundreds of billions of dollars because of that.
But he was the one who made a ton of money by betting that the housing market would collapse in 2008. Fast forward 13 or so years, and he is sending another warning our way for us investors. He thinks that index investing, stock hype groups, and free money is causing the stock market to soar in terms of prices, and he warns that this may not be sustainable. Here's what he said. Speculative stocks, #bubbles, ultimately see the gamblers take on too much debt. The market is dancing on a knife's edge.
Michael Burry says index funds will collapse, just like subprime CDOs did in the housing bubble.
Next is Rubini, who was an advisor for the United States Treasury Department and a professor at New York University.
We're in a situation where financial markets are extremely frothy. We have either zero policy rates or negative policy rates in advanced economies. In spite of a pickup in long rates, financial conditions are very easy. And we're seeing widespread frothiness, bubbles, and restaking and leverage. This is the phenomenon you see with the cyclically adjusted P ratios now being at levels they haven't seen since 1929 or 2000, when there was a bust of bubbles.
Next is Muhammad Al-Arian, who's president of Queen's College, Cambridge, and chief economic advisor at Allianz.
Wanted to ride the liquidity wave, and you knew that that liquidity wave would continue. Now we've got better clarity on the economics, which makes the policy and therefore the liquidity wave more uncertain. And that is a really important macro transition. And I agree with Mike, you've got to look below when the macro transition complicates the outlook for the market. You go down a few levels and construct your portfolio that way rather than construct it at the macro level.
Our next guest is warning of the largest, most significant stock market crash we'll see in our lifetimes. He is Harry Dent, founder of HS Dent and a pioneer of demographics research. Harry is the best-selling author of several books, including The Great Boom Ahead and his latest work, 0 Hour. His claim to fame has been predicting, correctly calling the end of the Japanese boom in the 80s and the boom that we saw subsequently in Europe and the US.
Next is Peter Schiff, who was famously calling for the bubble of 2008, and a lot of people used to be against him and people used to make fun of him. And he was right and they were wrong.
When you're buying it now. I mean, in fact, I was watching on the CNBC yesterday, and just about every single anchor all day was convinced you got to buy. You can't lose. Even if the price goes down, it'll come back up. It's a no-brainer. Buy it. You're all going to get rich. So this is how bubbles end. This is not how they begin. We're much closer to the top than the bottom. Not only in price probably, but in time. I mean, this is like a parabolic. Look at that move up that we've had, right? I mean, this is not a sustainable move. There's never been a market that's moved up like this that hasn't come crashing down, including Bitcoin. Look what happened to Bitcoin in 2017. It went way up and then it was down 70% in 2018. I think the odds are much better that we have a big drop in 2021 like we had in 2018 than another big move up.
Mark Cuban, who's an American billionaire and a famous investor.
GameStop, going up, whatever, I've lost track, 4,000%, whatever it is. Any of this have you worried about the Fed or the overall environment that we're in right now?
Of course, I hedged the heck out of my portfolio. Absolutely, it has me worried. because, when you've got such low interest rates, and we're seeing speculation everywhere because as assets have inflated, you've seen it across a whole range of assets, whether it's cryptocurrency, whether it's trading cards, whether it's, non-fungible tokens, whether it's housing. When you've got such low interest rates, you're going to get appreciable assets inflating. And so it creates a lot of concern, because when interest rates, if and when they do go up, and who knows whether it's, years or decades when we'll see 4 or 5% interest rate again, then people will have different decision criteria, and that will certainly deflate. I don't want to call it a bubble because it's reality given the interest rates, but there'll be a deflation of some sort in those appreciable assets, and it's going to be scary when that happens.
Next is Steve Forbes, who's editor-in-chief of Forbes magazine.
Indexes had been setting record highs, at least till recently, but warning signals of a big fall are multiplying. These turbulent times. Here's one sign of the coming stock market storm. Every bull market, before it ends, is characterized by an astonishing, eye-popping story or event that in retrospect beggars belief. In 2008, it was the housing bubble. In the terrible bear market of the early 2000s, it was the high-tech bubble. In the savage but thankfully brief market crash last spring, it was, of course, the onset of the COVID-19 pandemic. Today, it is the unprecedented battle between sophisticated, multi-billion-dollar hedge funds and literally hundreds of thousands, if not millions, of small individual day traders who are taking their cues from discussion boards at Reddit, Robinhood, and others. Each individual may not have much money, but when acting together as a crowd, they are smashing the big guys. These small investors are helping send certain stocks to astronomical levels. Hence the head-spinning rise in prices of equities like GameStop, Bed Bath & Beyond, Palantir, Pitney Bowes, BlackBerry, Plug Power, and others. GameStop especially has been in the news. It is a floundering brick-and-mortar game seller.
Yes, I think it must end badly, but I don't know when. Yes, I think it must end badly, but I don't know when.